Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 28th of April. All right, a bit of an early update on the what to expect over the next 24 hours now. A lot of you may be thinking, well, what's going on with the markets? There's been very little changes across the board here, across the currencies, equities, treasuries a little bit higher, right? So that's the yields a little bit, the yield's a little bit higher, prices a little bit lower. So that's positive for the dollar, but we're not seeing any major change here, right? You get the dollar index hardly sort of moving. And if you're wondering what this is, well, this is the power of the federal meeting, okay? Federal Reserve meeting, where they announce, any changes to interest rates, forward guidance, and all these sorts of things. It basically it's such a big event, and it means so much for across all markets that it can really diffuse things leading up to it, especially when there's either not really big expectations or uncertain expectations, right? So we are in a bit of a pause, and we've seen this since Monday. Everything's just been sort of ticking away like it's in slow motion. Now, the good thing is, not the good thing that they haven't moved, but we do have a lot of pairs with support and resistance, and direction and momentum, for that matter, obviously has completely diffused. So what we're going to see, if there's any sort of major oddities or weird things from the Fed, then we're going to see these things take off. So hang on to your hats, because excuse me. So the dollar index has been trending down. We've got a trend line on the top side. That's got to be a focus. Same with dollar Swiss. It's come back and tested that trend line nicely. Dollar yen, once again, the odd one out, just sort of doing its own thing. This is probably more of a sign of dollar strength coming from the treasuries on dollar yen. And you see the tricky price action here around dollar CAD. I haven't actually updated the trend lines because they don't really make sense at these levels. If anything, you've got a bit of support line down the bottom there, but it's a bit of a mess. Oil has rallied a couple of bucks. So once again, we're waiting for that. We've got Canadian retail sales today, something to keep an eye on. And you've got the Aussie and Kiwi, which are sort of mimicking the euro quite closely, and that's not uncommon. Kiwi sort of starting to run out of steam here, running up against a short-term support line. Aussie's got one just below. Now, what's the focus here? Well, think of the data. We've got Canadian retail sales figures. We've got Aussie CPI data, right? So these two pairs will be sort of on alert. Even though we're not seeing a huge impact from the macros, you've got to start factoring this in. So Aussie and CAD will be in play. And then as it comes down through to the Fed, all these pairs should be in play. Just be aware of sterling. I know it's been going in and out of sync with the euro. I haven't been seeing too much about vaccine issues or pandemic issues or lockdown issues in the UK. So I think all the positive news from the UK coming out of lockdown is already factored in. So it's ready to be moved around with the dollar movement. Obviously, dollar index, dollar Swiss, dollar yen, in these big moves from the Fed, it doesn't necessarily do what everything else is doing. So just be aware of that. So, and the rest of the pairs will all be in play as we hit the Fed, right? So there's not much more to sort of be telling you except anticipate what's coming out. Obviously, the Aussie CPI is something to keep an eye on. And that's a quarterly number, right? That would usually be a massive focus for us. At the moment, it's sort of like, let's keep an eye on it, but it's not sort of epic. Retail sales out of Canada, once again, a number that would usually move the market, but the Fed is the main game, right? So keep an eye on, obviously, what the markets do. Now, this is not an easy one to be trading instantly as soon as the announcements come out. There's no change in rates expected, but it's all about their forward guidance. And what we're talking about is the expectation is they are going to shun, it was the term they were using, any sort of tapering, right, of bond buying. So basically keep all the stimulus going, keep it going. They know inflation's picking up a bit, but they don't care about that at the moment. So if that comes out, well, that's what's expected, and we probably won't see much movement on the dollar. If they do change that, that's where the variations will come from. So now it's not a clear-cut decision what they say and what they do around whether the dollar goes up or down. I think the smart play would be let it come out, get on their website, see what they're saying, or a news service. Check out what the impact is on the Treasury bonds, and that should coincide with the same, not the same move, an associated move on US equity. So if the Treasury yields increase, equities go down, and vice versa. So keep an eye on the Treasury bonds. This one is going to be important for the Treasuries, and that'll consequently impact the equity markets and obviously the dollar as well. If the yield goes up, dollar's going to rally. If the yield goes down, well, then the dollar falls. It's as simple as that. So you have to wait for the data to come out, then wait for it to impact the Treasuries and all the equities, and then you can start banging away. Right? Outside of that, it's pretty hard to understand how the market's going to interpret either side of the spectrum of what they're saying in the statement. So it's going to be a bit of a tricky one. And that's all you can do is just wait for the expectations. The smart thing to do is, like on the dollar index here, find out where support and or resistance is. Like usually you don't have both, but on a lot of these charts, as I was saying, you do have two levels. During the day, Aussie, as I said, Aussie and Aussie crosses will be in play potentially with the CPI. Canadian retail sales, 4 hours ahead of, or 4.5, 5 hours ahead of the Fed meeting. And then you come down to the Fed, and now you're looking for support and resistance to get involved, right? I think the dollar's been in the doldrums for long enough. I'd like to see the dollar bounce. That's going to give us trading opportunities on just about every pair on the downside on the dollar block. This should give us nice sort of trend lines, nice movement on the downside. But we need a few of the ducks to line up for that. All right, guys. Well, that's it from me. It's, as I said, a bit of an early update, but you know what? You can see the writing's on the wall. The market is pausing. They are waiting to see what the Fed does, because that's where the direction comes from. And that's when trading becomes easy, when you know which way the currencies are going. All right, guys, have a good one and all the very best. Cheerio.